Hey guys, this is Bruce Marshall from Simpler Trading with the nightly market update for Wednesday, July the 10th. And we had a pretty interesting day today. If you weren't watching, we had FOMC minutes at 1 o'clock, but prior to that, early, even before the market opened, we had Powell commentary, and the market just really is back in bullish mode now because we're going to get a rate cut, which is a little mind-boggling to me a little bit because just even yesterday, 2 days ago, there was a 93% chance of a rate cut. But what I think the difference is that there was only about a 3% chance of a 50 basis point or half percent cut yesterday. And some of the commentary from the FOMC minutes and from Powell this morning sounded a lot more dovish. And the thinking is that now the likelihood of a bigger rate cut comes in. It's like crack, gotta have more, right? And the chance now, there was a 3% chance yesterday of a half percent, 50 basis point rate cut, right? And now that is about, let me see, I wrote it down here, about 30% chance, which is still a 70% chance it won't. However, doesn't matter the market, right? Gotta buy. And the backdrop, I'm not making light of that. The backdrop is that this obviously spurs the economy and all that, and don't fight the Fed and all that kind of stuff. So we need to definitely be aware of this. And I've been saying for a while, for what it's worth, that we got to keep playing this thing to the upside with some hedging on the downside. Let me show you what I'm talking about here. It's a little clearer. This is the S&P, and we'll look at the other ones here in a second too. But if you look at this gap doesn't look that big. I mean, there's 2975, and we went to 3,000. Again, if you didn't see, new all-time high today. All-time high. This is the S&P, not the ES. So cleared that hurdle, touched it, faded, and then we kind of grinded all day and ended up not doing a lot. But that's only half the story. If you look at this, that's during the regular cash session. But check this out. This was pre-market. This is what I'm talking about here. If you notice this is when Powell's comments came out, and again, 2975. Boom, straight up. And this is before the market even opened. The market opens right here. So this was at 7:30. Market opens at 8:30 Central. So again, and this is a futures. The reason I look at this, or we should all look at this, is that of course this, to me, the straight up stuff right here before the cash market even opens is algorithms, pushing this thing. After the market opens, there's a lot of FOMO buying. There's probably a lot of short covering as well. I think a lot of people were targeting the 3,000 area, and we hit it again today. So, what does that mean? From here, and I wish I knew, because we are even in a bigger question mark now. As we have been looking at for the last several weeks, we've been talking about this, about kind of, I hate to say buy the dip, but that's basically what it is. We need to keep looking higher with, we put some hedging on the downside as we go. But these are, that is a, what's called the century levels, the 2,000, 3,000. Those big levels are huge magnets, and they're also huge, they're magnets on both sides. So once we pass that, they can pull us back down to that as well. So, we've got to be aware of that. Obviously, if we get 50 basis points, we're going up here, and probably quickly. Again, just the math says 29% chance that's going to happen. So probably not going to happen. The thing that worries me a little bit is that if it doesn't happen, or anything that's going to disappoint the market now, we will quickly retreat, and it won't be one of these kind of deals. It'll be this kind of deal. If the market gets disappointed by the Fed. Now the Fed knows that, so they're going to be very careful, right? But by cutting rates, it does give the Fed some padding to, you know, to do things in the future as needed. The Fed is more worried about global slowdown and things like that. Still related to China and so forth. That's still on the plate. But again, as we have it right now, the next big thing is going to be the next Fed meeting when they announce that rate cut. We've got more Fed speakers talking tomorrow and all that kind of stuff. But I don't. As of right now, you might as well just bank on a 25 basis point rate cut on July 31st. The outlook from there will be very critical because, is it going to be a one and done and they're finished? That's probably going to disappoint the market. Or is it going to be 25, then another 25, then another 25, as a lot of these analysts or economists are suggesting, and I don't know. I really don't know, especially at this point. It's still a little early, but we'll get a little more indication as we get closer. And don't forget all the outlying things that can move the market. Tweets and news and that kind of stuff can still move the market around. They've just kind of been pushed on the back burner because everybody's focused on the Fed at this point. So hate to make it all about the Fed, but that's all it's about right now is the Fed. And again, the way we play that is up. One thing to note here on the NASDAQ, let's use the NDX. We are, again, we're within a stone's throw of we're at new all-time highs, but we're pushing higher. And again, remember. Remember that we've got earnings season coming up as well. We've got Amazon and Netflix and Google and all of the Apple and all that kind of stuff coming up as well. So be prepared for that. So all that being said, I don't really have any trade suggestions right now. I want to say close your eyes and just buy everything, but that's just I'm kidding, totally kidding. And there are some pockets of weakness that are bothering me a little bit. We need to keep our eye on Boeing. Boeing's the largest component of the Dow. Boeing's got a lot of issues that aren't resolved, and that could be a big problem. The other thing too is the transports are not keeping up with the market. That's not a good sign. So the Fed might smooth everything out or not. I don't know, but the way I'm playing in the short term is probably some range-bound chop, and I mean wide range. Say, for example, in the S&P, maybe 50 points up or down, from here over the next couple of weeks while we gear up for the Fed. I think a lot of this rise is already being priced in, for either scenario or the rate cut scenario on the upside. So range-bound chop to the upside up into the Fed. And then we really step up our hedging ahead of the Fed for what might come on the other side of that. But other than that, that's all I've got for today. And I hope this helps make sense. Again, stay light, stay nimble. I'm pretty cash heavy right now, just kind of waiting to get more indication of direction as we get a little bit closer to the Fed. So I hope this helps, and I will see you guys at the next update. Thanks.